If you're waiting for the headlines to calm down before you feel confident about your investments, you may be waiting a long time. Hi, I'm Brett Carleton, coming to you from the offices of Heritage Wealth Management. I want to spend just a couple minutes today talking about what's going on in the world, give a little perspective, and then talk about what we're doing and what we can be doing during times like this. One thing we know for certain is markets do not reward certainty. They reward discipline. This first quarter has been a perfect example of this. There's no shortages of headlines, geopolitical tensions in Venezuela, Iran, Cuba. We've got Supreme Court decisions. We've got talk of a slowing economy, discussions around interest rate risk. There always will be something to worry about, but we cannot build an investment policy around this. We have to build the policy around your long-term goal. And that's really what we can control, is we can control our allocation, our behavior, and our plan. We're not going to make changes because of what is going on around us. We're going to stay focused on your plan and what we can control. Just to give you some perspective, markets are down 7 to 8% currently, which is very normal. If we look back over the last 100 years, the average drop down or drawdown in U.S. equity markets is over 14% annually. And if we think back to this time last year, with the tariff announcements, markets were down over 21%. And the thing that we cannot do, though, with all this is we cannot predict how markets are going to recover. And volatility is to be expected. It's part of the process. But by being out of the market, investors risk the recovery. And if we think back just to last year, the recovery from the tariff announcements, the market was fully recovered within about 6 weeks. And when an investor gets out of the markets during times like this and they miss this type of recovery, it's something that they never can truly recover from. So what do we do? What are we doing right now during times like this? Obviously rebalancing is an important part of the process that we go through right now, because different asset classes have pulled back. We can add to sectors that have gone down. We've had a 3-year run in these large cap stocks. We can trim some of those back, again, add it into sectors that have gone down. Another thing that we saw last year is international markets, both emerging and developed markets, did twice the return that U.S. markets did here last year, in spite of them having lagged U.S. markets for so long. So we want to make sure that we still have a diversified portfolio that matches up with your allocation and your plan. Other things that we do is other tax loss harvesting opportunities. Can we realize some losses today that we can use to offset gains in the future? Another real good strategy is for those of you that might be doing Roth conversions or having to take money out of beneficiary IRAs. We can get more shares out when markets are down, and we can move that into the new asset, whether it be a Roth IRA or just outside of a beneficiary IRA, where we can have the recovery in a more tax advantage area. So there are things that we can do, and this is when planning becomes imperative. Let's wipe out the noise and let's focus on what we can control. I still, to this day, am amazed at how investors react. The events that cause the reaction change every time. This is my 37th year in the industry, and I think back to the first Gulf War, the second Gulf War. Here we are back in Iran with another Gulf War. But it doesn't matter the event, whether it's COVID, whether it's inflation, but investors tend to react the same way. Even with all the market data that we have and what we have learned, that staying invested and growing with the market is the most successful way to grow wealth over time. And I don't know why more people don't follow that strategy. But I wanted to quote just Peter Lynch, a famous Fidelity mutual fund manager, once said, far more money has been lost preparing for corrections than in the corrections themselves, because people are out of the market. As Charlie Munger said, the beauty of the market is the compounding. Well, if you're out of the market or you sold at a bottom and you miss the recovery, you'll never be able to recover from that. So every time, discipline beats prediction. I like to say, if you want to see predictions, turn on CNBC Every 5 minutes, you get a different analyst with a different prediction on the market. That is no way to manage your long-term investment strategy. So I just want to sum it up with this is all built into your plans. Volatility like this, we expect this. We just don't know what's going to cause it, but it is built into your plan. We are here to help you stay on track during times like this so we don't get off track and do something that would permanently harm us. And just in closing, I'd like to say if you have questions about your plan or questions about anything that's going on, we're always here to talk to you, and we always love to hear from you. So please let us know if you have any questions or concerns, and thank you for your time today.